Good morning and welcome to the Lightcast studios for this live analysis of the employment situation, also known as the Jobs Report, a monthly report that gives us some indication into the health of our economy. On this September 1st, 2023, I'm your host, Christopher Laney, and I am joined by two Lightcast economists that put the art and smart when it comes to economics. We got senior labor economist Ron Hetrick and senior labor economist Rucha Vankudre. Ron, Rucha, welcome to the studios.
Morning, Chris.
I'm really glad to have you guys here. We're going to go ahead and get started. Rucha, I want to start with you. Getting a first look at this report, what are you seeing? What's your initial reactions? And was this what the Fed was hoping for?
Yeah, I think in general, this was what the Fed was looking for. What we're seeing here is we saw about 187,000 jobs added, and unemployment ticked up to 3.8. Now, compared to what the expectations were from economists, which was 170,000 jobs added and steady unemployment, this is actually good for the Fed in the sense that it shows more of a cooling than I think we had initially been seeing in some of the earlier reports. And so I think in many ways, that's a good thing. We're still adding jobs. And yes, unemployment is ticking up, but still to, a very reasonable level and kind of what you would expect to see at this point, given sort of the policy changes that have been put in place.
Ron, when you're looking at specifically what's happening with the various industries, what is your initial reaction? What industries are you seeing as winners and losers, and how does that affect our economy?
There's so many things happening in this report that, they're kind of normal, but a lot of people don't like normal. They're expecting certain things to happen. Manufacturing's been relatively flat all year. That's a good sign. Orders have stayed high. A lot of people predicting recessions. It has to start with new orders dropping and manufacturing like laying off people, but we're not seeing that. We're kind of seeing small incremental gains, construction still hiring. I think one of the things that's been interesting to me, in particular when it comes to the industries, are the industries that we know are kind of worker starved. Take hotels, for example. You have an industry that is still well over 200,000 lower now than it was prior to the pandemic. So I don't think people are traveling less. I think our demand for things like hotels is just as high as it ever was. It's just that we don't have people to put into those jobs. And I think restaurants as well. I mean, we've been talking for the past several months about the hiring that is occurring in restaurants, but everywhere you go, there's still help wanted signs. Well, why is that? Because restaurants themselves are still not back to their pre-pandemic level. So I know that the consumption of services is still very high amongst the American public, but the industries they're drawing from still aren't able to fully staff up like they were.
Rucha, when you look at the data when it comes to the industries, is there anything that's popping out to you? And one question I had for you, we know we've been watching the news and some of what's happening in Hollywood regarding the strikes. Is there anything in our data that is showing that it's starting to have an impact?
So, if we look sort of across the board at the industries, as Ron said, the big winners we would say for this month really were construction, manufacturing, and then also healthcare and social assistance, which added 97,000 jobs. One of the big losers was information, which has been losing jobs for a little bit now, lost 15,000 this past month. But what I think is interesting there, as we were talking about Hollywood, is I think usually when you say information, people kind of assume sort of more of the big tech firms, but that's actually not generally the case. A lot of those fall in professional and business services. But the biggest place we're seeing this drop is within motion picture and sound recording industries. We're seeing a drop. We saw a drop of 17,000 jobs between last month and this month. And that's really what's actually driving that big decrease in information.
Interesting. Rucha, I want to stay with you for just a second. You alluded to this in the beginning, talking about unemployment. Now, you mentioned unemployment ticked up. Why is that so important? And from your perspective, is this a positive or negative thing?
It's always tricky to answer this question about unemployment because it's hard to say, yay, more unemployed people, right? Like that's generally at an individual level, like obviously for the person who's unemployed, that's probably not great. But for the economy as a whole, I do think it's actually a positive thing for the most part because unemployment still is low. And to some extent, in order to see inflation come down, we need to see unemployment tick up a little bit, right? And so the fact that it's been coming down, but kind of has been plateaued for a little bit, people were sort of wondering what would happen yet, right? Like, would there need to be more interest rate rises if, in fact, inflation has now plateaued and we can't move unemployment? But the fact that now we're finally seeing this uptick, I think, is a good sign for the Fed, right? And a good sign sort of for the market as a whole that inflation now should be able to continue to come down. And so I think overall that is in fact a good thing for the economy and not the individuals. And I would also add that if you look at the unemployment increases, I think something that we sometimes worry about is, if there's minority groups maybe that are being hit particularly hard, then that's something that we worry about, right? But actually, for the most part, I think if you look across, almost all groups had a pretty steady increase in unemployment. So it's really an effect that's kind of being spread out. In fact, the only place we didn't see it was within the Black and African American population. And so I think in general, if unemployment is going to go up, this is kind of like the kind of increase we would like to see.
Ron, we have talked about labor force participation extensively over the last couple of years as one of those key indicators in looking into our economy. When you look at this report, what's popping out to you when it comes to labor force participation, not just the overall number, but also diving into the specifics of demographics within that number?
It's been interesting all year long. Labor force participation rate's been stuck. It's like 6 months it was stuck, and we finally get an increase in labor force participation. I'm really kind of encouraged in the way we're seeing this. So in the past several months, it seemed that all of our labor force gain was occurring. It looked like almost through immigration. We were seeing a lot of growth in the Hispanic and the Asian population. So these are serving different needs in the U.S. workforce. This particular month, the big surge we saw in the labor force actually came from white women over age of 20. So when you look at that, one of the things that kind of jumps out to you is that it's August, school's going back in, and it does look like there was a resurgence of these women who are kind of re-entering the labor force. This is good. I mean, we want these kind of surges to occur. We want it to not necessarily come from immigration, because that's an uneasy faucet for us to kind of turn on and turn off. So it's nice to see those kind of gains that are occurring. But as Rucha said, this was not a unilateral gain. It's interesting. Some of those labor forces that we had seen growing actually ticked back again, just back a little bit. But to see that growth here, kind of on our domestic population, I think it's a good sign. I know that's what the Fed wants. Also, just to say that, our unemployment rate did jump up, a little bit here. If you look at unemployment claims over the past month or so, they barely moved. In fact, recently, in the past couple of weeks, they're actually going down. So you're talking about people driving the unemployment rate by re-entering the workforce. And we did see a pretty decent gain in that population. So this is what the Fed wants. I mean, you do want to pull people off the sidelines, get them working again. And this is the way we want to do it.
Ron, can we stay on labor force participation for just a second? Did you get a chance to dive into anything related to youth? I know that's been one of the indicators that we've been looking at, and I wanted to see in this report specifically, are we seeing any gains among the youth population?
Yeah. So what we saw is the labor force did tick up a little bit. What was really interesting is we had a huge jump in the unemployment rate for youth from like 11 something up to 12.2. This, we're still not talking kind of a monumental growth number. And we've been dealing with almost some historical lows there. And I'm still very concerned about the lack of engagement. But I do find it interesting that as school is kind of re-engaging, then when we kind of get a labor force increase, it almost speaks to the fact that maybe students this summer were not working. And now that they're kind of back off of their activities, maybe they're re-engaging in the labor force. But, the summer months are really tricky to figure out. I think we're going to know a little bit more in September.
Rucha, I want to start with you, and then Ron, if you have anything to add, I certainly want to get your thoughts on this. Recently, there has been various reports talking about how wages are actually decreasing across many different industries, and employers are starting to take control, whether it's bonuses, not giving those hiring bonuses, and or those starting wages are just a little bit lower. When you look at this report, Rucha, are you seeing that, or what are some of the indicators that you're monitoring that would tell us maybe a different story or the same story?
Yeah, so when we take a look at hourly wages in this data that's just come out, it's true that it's sort of ticking down generally, the year over year changes, but wages are still going up in absolute terms, right? So yes, I think it's what we would expect, right? With things are slowing down slightly, but that's not to say wages themselves are decreasing, right? And at the same time, I think, it's hard to say that employers are sort of back in charge, right? Because given unemployment is still low and there's still, the JOLTS report came out and I think everyone was surprised that it fell to, over 8 million, which is still a ridiculously high number. So, as Ron was saying earlier, like hiring is coming down, but not because the places are fully staffed. It's because there's no more people and they're not trying to hire, like they know they can't hire them, right? So it's hard to say that we're back at a place where sorry, that we're back in a place where employers will be back in control. I think even as we see things kind of slowing down, we're really sort of at a new normal where everything is going to be, I think, a little bit more worker driven just because of this huge change in demographics that we've seen.
Ron, how about you? Anything that
Yeah.
you're monitoring or watching when it comes to wages?
Yeah, I think one of the things that, we've been looking at here is this kind of split economy. So, lately you're starting to hear most talk about a white collar recession, and in certain industries, banking, for example, has really gotten walloped since the interest rate increases have been occurring. And so I think some people in that specific industry might be like, hey, I'm not getting the kind of opportunities, I'm not getting the kind of wages offered to me that I once was. But you got to be careful here. There's other sectors, insurance, securities, commodities brokers, just absolutely flying right now. And, we made a big deal out of IT early in the year, right? There was some layoffs that occurred towards the end of 22, going into January of 23. But let's not, be mistaken here. That industry is right back on its long-term growth trend over the past couple months. Engineering also doing very, very well. There's still a lot of opportunity and a questionable depth to our labor force. So, I think we've got to be careful about saying things like things are coming down. Rucha nailed it. Wages don't come down. Maybe we just offer a little less than we once did, but you don't go to your staff and go, that's it, everybody's getting a 20% pay cut. I certainly wouldn't do that when you have a 3.8% unemployment rate.
Ron, I want to stay with you for just a second. You're currently doing a series for Lightcast right now talking about the staffing industry. Looking at the data, is there anything that pops out to you in this month's report regarding the staffing industry, whether it's positive and or negative?
It's just an industry that just keeps taking it on the chin. They even point out in the report itself, since March of last year, down, well over 200,000 jobs, almost 250,000 jobs. And for years, decades, we would talk about staffing is a leading indicator, but we've never dealt, just like with so many other things that the Fed is experiencing now, we've never dealt with these conditions in an acute labor shortage, which is what's happening now. So what's going on is a lot of the industries that would employ temp workers like manufacturing or warehousing have kind of been concerned about keeping that workforce. So they're securing them rather than letting somebody go on a temporary contract that could end and then you don't see that person again. If you like the person, you're taking them permanent. So we're not seeing this drop off in hiring that you usually get as a predictor. We're actually seeing people just kind of hold what they have. And that's not good news for temp staffing. And temp staffing thrives in kind of wild fluctuations. When businesses are very unsure about their future, they'll hire temp staff to help them kind of ride those waves out. But I don't think businesses are very concerned, despite all of the rhetoric and news we've heard about recessions that certainly haven't manifested. We see industries that are like, look, I still am getting my orders. I am not about to let anybody go. I'm afraid that won't be able to get them back after what just happened in 21 and 22. And I think that's definitely hurting that industry right now. Will that stay that way into 24? I'm a little bit less sure. I think as soon as industries feel that Powell is done kind of increasing interest rates and they feel that everybody kind of is, getting that safe space again, I think industries will start to re-engage. But I don't think it's going to happen until we see some security around those interest rates.
Interesting. Rucha, what are your final thoughts, maybe your top 3 takeaways when you look at this report?
I think top 3 takeaways are similar to the stuff that we've been saying for many months now. Very strong labor market here. Everything's continuing to hold. Maybe there were some revisions that came out that the past few months were revised down, but everything is still gaining jobs. Unemployment ticking up, but sort of across the board, I think is overall a reasonable sign for the Fed that, interest rates are doing their jobs. And I think, we're in for hopefully a good fall.
Ron, how about you? Your final takeaways?
Yeah, I think there's 2 things that I would point out. Number one, I've been hitting this over and over again. What the Fed wants is to see labor slackening. And I think, the payroll job gains is something I think they were kind of paying attention to. And I think that these lower numbers are encouraging to them, but they are definitely watching that supply side. The supply side has been sending no signals that it's weakening. And, Rucha made this point earlier, and I want to really stress this. What we're looking at is an economy that I believe there's a lot of venture capital money. There's a lot of private equity money sitting out there that people want to invest. They're waiting for things to stabilize so they can re-hit this economy. They want to expand it again. And yet the Fed's sitting here going, if we don't create enough slack in this rope and we try to pull this rope tight again, we are right back in inflation city. So I think what they're trying to do is we've got to continue to press down on this, put the brakes on until we can loosen labor enough that the economy, when it does start to take off again, doesn't immediately get into a situation of, acute hiring. And I think related to that, I'm very concerned about the rhetoric. Rucha pointed out job openings went down a little bit. People made a big deal out of it. They're still incredibly high. Payroll job gains are muted, but they're still growing. Unemployment went up, but it's still low. Don't lose track of historical perspective when you look at these numbers. It is still a pretty tight and nasty economy out there in the labor market.
Ron, Rucha, this has been a great conversation. Thank you for joining me here in the studio today. We can't wait to see you again next month. For more information about this report or any other labor market related data, you can visit lightcast.io. Thank you again for joining us.